Now, a new Moneyweb report shows that shareholders at property group Resilient might have misled an independent inquiry appointed to look into the company's dealings following a report earlier this year by 36ONE Asset Management on the group's high valuations. Warren Thompson from Moneyweb now joins me for that discussion. Warren, a very complex one with Resilient, especially the way it's structured. If you could just share for us what the complications are here.
So basically what happened is in the wake of Steinhoff last year, a couple of people started looking at companies on the JSE, and certainly 36ONE Asset Management looked at Resilient and noted there were so many different entities that seemed to be buying shares in the Resilient group. So you've actually got 4 listed companies in the Resilient stable, and what they did is they did quite an in-depth, what I imagine began with quite an in-depth shareholder analysis, and they found that the shares of the companies weren't owned by the Stanlibs and the Allan Greys as much as they were by a whole group or a whole cluster of these small PTY limiteds. And then when we started looking into it, we found that a number of the companies that were buying shares and trading shares in the Resilient stable were very kind of obscure companies, and a couple of them, 4 of them that we identified that we call the K companies, owned over R1 billion worth of Resilient shares, just by one example. So what the company did is, after the 36ONE report came out, there were some other brokers that joined in and performed their own analysis and suggested that the shares in the companies have been artificially bid up or manipulated. And that included the likes of Arkham Capital and Navigare. And so what the company did is they set up an independent review led by the previous Auditor General, Shaket Faki, and he was to look into this issue. And we interviewed him, obviously, after this independent review was concluded. They didn't make the report public, so that was problematic for us because we wanted to understand what he did. And he said that he went and interviewed various executives. He had discretion to interview executives at Resilient, as well as some of the people that in charge of these entities that had been buying up the shares. So he took these representations from them, and then what we discovered is we went and did some work and found audited financials that suggested that some of the people that owned these companies that were buying shares in Resilient didn't actually own the companies. The companies were owned by someone else. So it's all kind of triggered a whole cascade of thoughts and doubts around, first of all, the integrity of this report that Mr. Faki produced in looking at the share trading in these companies. And of course, Resilient's
operations as well.
That as well, but the initial focus was certainly off the basis of that 36ONE report, which was saying, but hold on, are these shares being manipulated upwards? Are people buying these shares and related parties buying these shares to move the shares up? And we're no closer to really getting to that because of this obvious contradiction that we found in the independent review.
When one interviews guys on the market and guys that trade most of the time in South Africa, it's very hard to prove things like propping up a share price and insider trading as well.
Right.
What are you seeing as the signs here that should be a worry for those that are invested?
Well, the obvious argument is that for companies that need as much capital as these 4 companies do, because obviously they're taking the money that they raise in the stock market and they're buying properties, and they're also buying each other's shares, which makes the whole thing more complicated and sophisticated. So the key is, why is the shares being bid up? Because if you go and you're constantly going to the market to ask for more money from your shareholders, if your share price is higher, you need to issue less shares. So it has like a positive reinforcement on the price in terms of making those investments.
And when does the JSE or the FSB step in here in terms of regulation of such things?
So the JSE has very strict and well-defined rules in terms of what share manipulation is, and ultimately they're going to be the only arbiter of whether these share prices have been manipulated. They have currently indicated that there is two counts of share manipulation being investigated, as well as misleading financial statements. So there's 4 separate investigations underway, as I understand it, at the moment.
All right, we'll keep tabs on that investigation. That was Warren Thompson from Moneyweb.